Welcome to the second outing of The Property Show on UK Health Radio. I'm Matt Turner, a London-based property finder, and today I have the pleasure of speaking with Liam Johnston, a mortgage broker who assists local and foreign buyers with finance when acquiring property. The second part of the show, The Marketplace, takes me to Tottenham Court Road, an area in the heart of the Theatre District of London. I talked to Rod Heffernan, a real estate agent who started his property career in 1982. Needless to say, a man with a wealth of experience. Welcome Liam, how are you today?
I'm very well, thank you.
Good. I've known Liam for probably pushing on around 6-7 years now, maybe. I think since I came back from France, and have dealt with Kingsway for, I think I first met Paul in about 2002. So it's a great company if you're looking to get finance, and hopefully from our conversation today we'll think the same. So Liam, so what have you been up to this week? You've been busy helping people remortgage, and what's your daily duties have been like this week?
Daily duties, we deal with all kinds of clients, all age ranges. We've got the first time buyers who are out there trying to find out, first of all, how much exactly they can borrow, so which is always the initial meeting, and just working out the maximum borrowing available. We also deal with the home movers, so whether it's they're looking to sell and buy somewhere else, or sell or remortgage onto a buy-to-let basis, releasing equity and taking that equity to that new property.
Yeah, and obviously, I mean, I remember the days where an ex-girlfriend of mine, she got a loan out, and then took that and got a self-cert mortgage, and kind of borrowed 100%. I mean, those days are gone now. What's kind of the loan-to-value rate that, let's say, a standard, a first-time buyer can look at borrowing these days?
So the minimum deposit required is 5%, and there's a lot of schemes out there as well. So you've got 95% mortgages,
okay,
but you've also got the various different schemes, Help to Buy, which is also a minimum requirement of 5%, where the government will potentially provide a 20 and up to 40%, depending on where the property is located.
Yeah, people up there, is it with Help to Buy? I think you have to kind of go for new build properties. Is that correct?
It is on new build now. Yes, they've removed the second part of the scheme, which used to be on resale. Yeah,
no, I've actually not dealt with any of those I know obviously it's a great government policy, and obviously developers are liking it. I personally don't like new build properties, so I've quite pushed my clients away from them, but that's probably a conversation for another day. But generally there's a lot more, I would think probably obviously since the Lehman Brothers, and before that people were getting finance quite easily. It toughened up somewhat, but how are you seeing the market lending these days?
I think lenders are very stringent with their checks at the moment, and every lender has their own set criteria in terms of the way they assess applicants, and they've before it used to be the brokers who would do all the affordability assessments and work out based on their income and expenditure how much exactly they can borrow, whereas now a lot of the lenders have got these affordability assessments built into their systems, where it's based on national statistics, and that will basically they'll have the decision already built into their computers.
Yeah, no, for sure. And obviously you're, I know the benefits and the pros and cons. Now, so people listening to this think, well, I've got a bank account with X bank. Every time I go and put some money in, they're asking me, do I need a mortgage? Why would someone come and use a broker, for example, to as opposed to going to their standard bank to get finance?
I think every person who comes to see us is in a very, very different position, and why someone would approach a broker rather than go direct to the bank. Well, their bank's not necessarily going to be offering the best interest rates in the market, whereas coming to a broker, we do have access to the majority of the market, and we can see which lender's going to most suit that person. Yeah, and that's.
Yeah, it's kind of the main reason. I was speaking to someone the other night. I didn't really. It kind of sent it home to me. I think if you go into a bank, he was saying to me, they're not allowed actually to give you advice anymore. It's more of a, I don't quite know how to politely say it, but not quite a bucket shop, but they're just pushing products. And they always have that, we can't give you advice. Whereas I suppose in many ways, you as a broker, you can look at the individual and place them in the correct.
Exactly, yeah. I think it's all about finding out, whereabouts that applicants, where they are in their life, and what they're planning on doing in the next 2, 3, 5 years. Because, if they're looking at this property as a stepping stone, they're not going to be in this property for the long term. So the one thing you don't want to do is make sure, you want to make sure that they have some kind of flexibility in the product, and you're not going to be penalised later on.
Yeah, no, sure. And I suppose for people who have never been through the property process, and I always say how complicated that is in itself, and a big part of that is once you've found a property, you get it under offer, getting it from the mortgage survey and everything, chasing it through. I think that's the big thing really, where a bank, you might bank with them for a long time and they'll give you a certain product, but they're not there helping the transaction through, and I guess you're full on, hands on, and chasing the surveyor and getting the mortgage offer and
exactly,
and all those bits.
We're there from the beginning, so it is, as I say, it's pinpointing which lender is going to be best for that client. But not only that, if you do approach a bank direct, it can, that person could be waiting, say, 2 weeks to arrange an appointment with that bank, whereas because
annoyingly they've got your mobile number.
Unfortunately so. Yes.
Okay. Yeah. No, for sure. So I kind of put Liam a little bit on the spot there. Why use you? But I would definitely say there's a lot of hidden benefits. Deal chasing is one of the hardest things, and you're trying to carry on with your daily life, and if you've got someone there to do that for you, it's you're going to save a lot of time and frustration essentially. So anyway, let's just talk a little about the property market. Obviously, I work in one area of it, dealing with when I'm out there with certain clients, talking to agents, but you're obviously seeing the market from a different place. I mean, how do you actually see the London property market at the moment? What's your kind of view, personal view? We're not going to hold you to it. How are you seeing things at the moment?
I mean, living and working in central London, the majority of our clients are in London, but they are located here, there, and everywhere. Whether they're in the UK and also outside of the UK, but the London bubble in itself, I think it is a bubble. Over the last, before it's property prices are completely hike, and then at the moment I think property prices have stabilised.
Yeah, sure.
But I think with there's so much uncertainty in the market as to where we're going to be in the next couple of years with Brexit, and what impact that's going to have on Bank of England base rates and and property prices.
So are you seeing more people sort of remortgage then, and sort of they're not moving because might do their own extensions, so they're taking money out? So is that kind of a trend?
We are seeing a lot more of that, yes.
Yeah, rather than sort of new applications on new properties. Yeah, I mean, it's obviously, you're dealing with the whole country then. So I generally just kind of stick geographically to within the M25. But you're obviously you're seeing what's going on out there in the rest of the UK.
Yeah, we are. Yes, we are.
Okay. And there's some big difference out there. You think is it different? Is there any sort of areas where you're seeing more activity, or is it kind of hard to say?
It's very hard to say. I think again, it's one of these with the London market. Is you always have a location where it's the trend, and more and more people kind of follow suit. In East London, it was originally your Hackney and your Shoreditch, and now it's your South East, your South West it's expanding.
Where those nice coffee shops and bakeries turn out, they seem to be the hot spots, which is not a bad way if you're looking around for new coffee shops and good flat whites. Then quite often there's a little property boom going on there. So you mentioned interest rates. Obviously, I think in my small property career, I think the highest I've ever seen them is kind of around 5% as a lending from the Bank of England. Obviously, we're at historic lows at the moment. It's 0.25%.
Last year,
which obviously is pushed on to the buyer once the bank take their little margin. But I mean, where do you? I suppose there's only one way to go. But where do you kind of see the next year or so interest rates? Do you have any opinion on?
I think in the next year, I don't think there's going to be a lot of movement.
Yeah.
I think as and when it does happen, it's going to be a gradual build, because you've got a lot of people who are on revert to rates or standard variable rates,
Okay.
And therefore, if interest rates were to increase, these rates would also increase the standard variable rates and the reverting rates, and therefore, these people who are on these rates might not be able to afford the mortgage payments, and therefore, it could be, potentially repossessions. It could really affect the economy.
Yeah. So what's just for some people who might not know, a variable rate, how does that work exactly?
So the standard variable rate is a rate which it comes down to how greedy the lenders want to be.
Okay.
So you've got your Halifax, Santander. Every lender has their own set standard variable rate, which differs. But the variable rates tend to range from about 3% to say 6%. And the 3% of your high street banks is 6%. So your the more specialist lenders, because you're almost like a mortgage prisoner, because they because you've approached that bank because of their niche criteria.
Yeah, no, okay. And then so the other options are sort of fixed rates, and what was the other? You said the other
reverting rates.
What's that exactly?
So what that is you could be on a product which, say, you're on a 2-year fixed rate of say 1.59%.
Yeah.
At the end of the 2-year period, you then go onto a reverting rate, which might be a percentage above Bank of England base rate. So it could be you're going to revert to 3% above Bank of England base rate.
Okay, so so suddenly Bank of England's rates are at 4%, then you have a little bit of a shock once your rate ends. No, okay. So I mean, obviously, it seems a bit logical to me at the moment. I mean, if you're looking to buy a place and potentially stay there for 5-10 years, you're moving house and your kids are going to a new school. Quite wise to move on to a fixed rate then, I suppose, if you're in that scenario.
Absolutely.
Yeah. What good rates are out there at the minute on a fixed rate basis?
I mean, rates at the moment range from about 0.99%.
Wow.
And that's you've got a large deposit, or you've got a good bit of equity in your property, but that's typically at about 60% loan to value. There are 6% if you've got at say 90%, rates are still around about still sub 2%, about 1.99%.
And that's cheap money out there at the minute.
They're 2 year. That's 2-year money. 5-year, fixed rates are ranging from about 1.69% roughly.
Wow.
Yeah.
Okay. And that obviously will vary depending on obviously personal circumstance, but we said you can get 5%. Mortgages, 5% down, so effectively borrowing 95%.
Yes.
What rates are on those? They'll be a little bit higher.
Because there's a lot more risk involved. Yes,
Yeah.
the rates are certainly a lot higher. You'll probably be looking at rates which are somewhere around about 3 to 3.25%.
Okay.
But if you're going through, say, the Help to Buy scheme, because the government's putting up the 20 or the 40%. You're therefore looking at say 75% or 40, or 55% loan to value products. Yeah. So the rate, the actual interest rates charged on the Help to Buy rates, they're very attractive. Yeah.
No. Okay. And obviously, the more you put down, generally, obviously less risk for the lender, the better rate.
Exactly.
You're going to get. Okay. No, that's fine. So we've got obviously some listeners over in the States, and obviously for them thinking to buy in London potentially. I deal with people who are cash buyers, but quite often it is better to leverage to get finance. Are there any restrictions for overseas clients? Do they have to go through different hoops than you or I, who obviously are paying tax here in the UK? What products are out there available for overseas clients?
So overseas, I mean, the actual processing is a lot more challenging in terms of time frames. Just the processing and dealing with the lender. Because they've got to do additional money laundering checks. They're usually the underwriting branch will be very different in a different location to the processing, and so it's typically from application to offer it can take say 6 to 8 weeks, rather than your high street bank on someone who's living here in the UK, which could take up say 2 to 3 weeks.
Okay. And just on that, the underwriter, I mean, obviously a lot of people listening will know the terms. So the underwriter, that's the guy that
who's assessing the documents and confirming that they are happy to lend to that applicant.
Yeah, which, just to go back to an earlier point, if you are dealing direct with a bank yourself, and you have these problems where you found a property and then you have to jump through a few hoops. You've got to pass some more documents. If you are dealing with a broker, quite often they have a direct line to the underwriter or someone very close to it, so you can get the problem solved a lot quicker. Just sort of jump in there. So just another reason to use Liam, maybe.
Yeah. I mean, we've got relationship managers with all of the banks, the building societies, who are there whenever we need them, and and not only that, it could also be before going ahead. So we get pre-approval. We get it's also creating a way, or not creating, but painting a picture and giving the lender a reason as to why they should be lending to that applicant.
Yeah. And I suppose in many ways you act a little bit like a filter, don't you? So you get full information from Joe Bloggs, the guy who's going to buy, and really what questions and criteria that the lender needs. Yeah.
Correct,
so then you know what information that to pass to him. Let's put it that way. That will help. Paint a nicer picture of the applicant, I suppose. Would that be fair? Would that kind of in a legal, obviously being very straight and giving them all the information they need. But that's kind of how I see it, anyway.
Yeah,
it's a positive filter.
We don't hide the truth, but
sure. Yeah, I wasn't suggesting that. No, not at all. So yeah, I mean, I dealt with an American couple earlier this year, and they purchased with finance. And they actually, the hardest part for them, and I didn't know them at this point, was getting bank accounts opening. Have you had any sort of problems with foreigners that you've dealt with?
With a lot of the foreign nationals purchasing here in the UK, a lot of the banks you'd have to apply or open a bank account with that bank.
Yeah,
and so that process can take up to 4 weeks. Mm-hmm. And so I've got a client at the moment who is currently based in Hong Kong, and we're going through Barclays Wealth. Now, the process is you have to open a bank account first, which is the 4-week process, and then once the bank account's open, that's when you can actually submit the mortgage application.
Yeah, okay.
Now, I mean, if you're buying a property, everyone knows that you are under extreme pressure, and completion deadlines, and so the fact that it's going to take 3 to 4 months rather than your standard kind of like 2.
Yeah. No, for sure. So basically, if that was my client, I would be having a lot of stress trying to hold that deal together and paint a nice story to the agents and the owners to explain why we are taking quite a long while. Because as soon as you get a property under offer, the first thing, and you must get this call from agents, the first question you get is, when's the survey booked? Yeah, which as soon as that happens and the owner of the property relaxes a little bit, they know that the buyer's paid a bit of money and is performing essentially. So that deal must be quite hard to hold together at the moment, and you must be under a bit of pressure. Yeah?
We're trying to keep everyone sweet, so keeping everyone in the loop, up to date with the processing.
Yeah. No, okay. So I mean, so there's no real barriers to overseas nationals buying in the UK. It's just maybe more of a challenging process on the setup, I suppose.
It's more of a challenging, process in the setup, but also, the rates and the fees tend to be slightly more expensive.
Mm-hmm. Yeah, but maybe that's fair enough at the moment, because obviously if you are dollar based, obviously the dollar floating around 1.3 as opposed to let's say pre-Brexit at 1.5, you're technically playing that market as well, and London prices, in my view, are a little bit cheaper for you out there. So another reason to get in contact and start buying property, I always think, in London. So just that we had a chat before we went on air. You've just recently, you don't just talk the talk, you walk it as well. You've just bought a property yourself in London.
I have, yes.
And I mean, just a little bit about that. Whereabouts have you, the area that you moved to?
So I've just bought a property in Oval.
Yeah.
So in southeast London.
Yeah.
And the processing time's taken 6 months, which is abnormal, to say the least. It's quite long, yeah. So, but in terms of setting up the mortgage, it took a couple of weeks to get the mortgage offer issued.
Yeah.
The delays lie with the solicitors and the seller's solicitors. The vendor who I was buying from is based in Hong Kong. And so the delays always, liaising with her solicitor and her solicitor communicating with my solicitor, was
to get it through. Yeah, I mean, so it's we all think we can go and do it, and obviously Liam's in the business, and it just shows that each situation is different, and you have to be as organised as possible, and there's anomalies out there that you can't control, right?
Exactly.
But lovely area you've moved to. I did actually have the benefit of working for about 1 month when I came back from France in Kennington, and it amazed me. It was. I thought I was in Holland or something, because there's so many people cycling around there. You have to kind of look twice. You're not going to get run over from a car, are you?
No,
it's basically bikes everywhere, which is great. I think you've got to be a little bit crazy to ride a bike in London, because no doubt. I mean, do you ride to work?
I certainly do.
Okay, how many times have you been knocked off your?
Only 4.
4 times. So that's it's a good insurance policy. I think you're going to need there. So maybe that was the reason your mortgage took a little while to go through. They were just checking that out. No, jokes aside, it's kind of the cycle highway, I think, isn't it?
Yes, they have now
put through, which is great. And I suppose in many ways, if we can make London greener and take the cars off the road, it would be wise. But you're a braver man than me, Liam. Anyway. So obviously there was a big change in the UK tax regulations last year, and stamp duty to people buying second properties, and it really kind of hit the buy-to-let market. I know that came in April last, so 2016, and I had a flurry of customers pre that to try and break to beat the 3% excess tax that you had to pay, essentially. I mean, have you seen any reductions in buy-to-let mortgages since last April?
Definitely. I mean, the majority of the buy-to-let mortgages that we're doing now are refinancing. So applicants who have already got their property portfolios, or whether it's 1, 2, 3, 10, and so it's just constantly trying to just review those mortgages and see whether they can obtain a cheaper interest rate, because not only residential mortgage rates are very, very low, but buy-to-let mortgages are almost as low as residential now. Yeah,
which I suppose in a competitive sense that's fantastic, because they quite often were quite a lot higher, weren't they? And obviously you could offset your the interest from the buy-to-let mortgage against your rental, so you didn't pay as much tax on that.
That's all changing.
That's all changed now as well, but maybe that's kind of a story for another show. I mean, there are, if you buy it in a company, it's very different than obviously if you buy it in your personal name. But yeah, again, maybe we can talk about that in another show. So just to go back to so let's talk about credit profiles then for people coming to you. With people taking out credit cards and loans and what have you, and they may be thinking, I won't be able to get a mortgage. Have you got any sort of experience, any tricky customers like that? I mean, obviously without mentioning their names and stuff.
So there's a lot of lenders in the market who have now fallen into that, who deal with applicants who haven't got that A-star kind of credit rating. And we've got lenders like Precise, you've got your Aldermore, you've got lots of these smaller lenders, Vida and New Street, who have tier products. So it depends on how the applicant's actually credit scored. That will determine which bracket they fall under. Mm-hmm. So there are always options available to pretty much most clients out there. But it is very, very important to keep on top of your credit profile. Yeah. Because that will have a huge impact on which lenders are going to say yes and which lenders are going to say no. Having credit isn't a bad thing. So if you have got the credit cards and you have got the loans, as long as you maintain that credit, that's perfectly fine. Mm-hmm. But as soon as you have, say, 1 late payment, 2 late payments, or a historic default, you need to be very, very out there and open, and just you would need to tell the mortgage lender that has happened, because that could make it, that could be the decision. Yeah, as a big
red flag pops up on the screen.
No, exactly.
No, for sure. That's obviously good to know. I'll try and clear my credit cards before I give you a call next for the next mortgage. What about I know that you're not doing so many buy-to-let mortgages at the moment. One thing I've noticed is it's quite tricky, especially in London, because when you're buying with a buy-to-let mortgage, quite often the lenders will have a sort of a stress test where the rent has to be, 50% is it 1.125? You explain it. I mean,
Okay,
is it 1.25? I'm trying to think what it is off the top of my head.
How it used to be, lenders used to have a rental calculation.
Yeah.
The rental calculation would determine how much you could borrow.
Yeah.
Whereas in recent times, that's all changed. So we've got one or two lenders. If you're looking to do like for like remortgaging, just to obtain a cheaper interest rate, then the rental calculation charge is still the 125% at 5%.
Okay, I was close.
You were very close, but now if you're purchasing a property, the rental calculations are a lot higher. And therefore, in London, it just means that you're going to have to put down a large deposit.
Yeah.
And it's also, which because of the PRA coming in, which is the Prudential Regulation Authority, that's changing everything again, which it all comes down to the tax bracket you fall under, and how many properties you have in the background, because they're also going to be assessed on a rental calculation. So it's not just as straightforward, the rent's this, I can borrow this. It's now, it's taking a look at the full picture and
it's definitely tricky. I know in London, obviously rental yields, they nearly non-existent really. I mean, if you're getting a 2%, 2.5% yields, and that's obviously before your that's a gross yield quite often, before you're paying for the service charge, which includes maintenance of the lift and the new uniform for the porter. They're quite hard to rentals are very hard to get in London. As you move out, then you've pretty got more expenses than I. But in other parts of England, rental yields you will hit the mark that you need to be at, 4 or 5%. So I suppose in many ways you're probably seeing, if you're doing buy-to-let mortgages, are they for outside of London, I suppose? Would that be
the purchases? Certainly, because the rental yields are a lot stronger.
Yeah. Okay. So it's obviously a very interesting trend. So there's a London market. Obviously, it's quite from what I've seen, it is definitely softer at the moment, and maybe that is because there's not so many buy-to-let purchases out there, I suppose. Whereas other hotspots outside of London are experiencing more rental purchases. Okay, so let's talk a bit about fees associated with finance. Obviously, people who take out products, and I've done this myself, say like with Metro Bank, and then you have to pay sort of £2,000 up front, or not up front, so once the mortgage goes through. I mean, has that affected the market, you think, a little bit? Or because some products that you don't pay anything, but maybe it's within the interest rate.
Exactly. So that's our job. I mean, we would always take a look at both options. So if we're looking at rates, we'll see low rates with high fees, and then we'll see high rates with lower fees. And so if you're borrowing, say, 100,000, it might not make sense to have an arrangement fee of £2,000 because it is a very large fee to pay on a small loan of that size. But then on the higher stuff, where someone's borrowing, say, 250,000 to $1 million plus, then it's certainly going to be more beneficial.
Yeah, so costed in, I suppose, to the products, and it will depend on personal circumstance. I mean, just on that as well, I mean, it's something, is there anything that people should look out for when buying with finance? Anything to avoid, the small print, which, obviously it isn't written in small print anymore, but what should they be looking out for?
I think it's very, very important just to get an understanding as to how long you're going to be living in that property for, because a lot of parents will always say, 5-year fixed rate, because they haven't seen 5-year money this cheap for a very long time.
Sure.
And so and a lot of people, I lived in my first property for 3 years. I've then I'm planning on living in this property for maybe 3 to 5 years, but because there's that uncertainty, I wouldn't want to tie in for that 5-year period, because there's a slight chance that I might need to break away early, and I don't want to be in a position where I've either got that lender where I could potentially port the mortgage onto a new property, or be penalised and pay the early redemption charge, which could be 3, 4, 5% of the mortgage balance.
Yeah, which quite often is on a reducing scale, isn't it? So if you take a 5-year, let's say you take a 5-year fixed out, quite often there could be a 5% penalty on that, and then the next year 4%, 3%. So it's definitely something I look out for when I'm purchasing, because things change, circumstances can change, and if you suddenly had to sell and there's a 5% penalty on the loan, that's more expensive than you're going to pay the estate agent to sell the place, isn't it? And obviously there's things definitely to look out for.
But there's you've also got a lot of products where there's a lot of flexibility.
Mm-hmm.
So if you do get bonuses and you want to reduce the mortgage down as fast, as quickly as possible, you do tend to have a 10% over repayment allowance anyway. So a mortgage of 100,000 you can pay off, say 10,000 in year 1, 10,000 in year 2. After the 2-year period or 3-year period, however long you're tied in, you've then got that total freedom again. Yeah. So, but if you think you want to sell in the next year, then would probably choose to go for a product which is completely penalty free.
Yeah. So I mean, that's obviously very. When you're talking to the client, you're taking their complete circumstance involved, and then you're placing them with the right product. I mean, on that early repayment, do you have people? I mean, it's. Interest-only mortgages don't really exist, I suppose, do they anymore?
They're coming back. They are coming back.
Okay.
There's a lot more hoops to jump through. Yeah. In terms of the income requirement is is single, say 50,000, joint 75,000 or 150,000. Every lender has their own set criteria for interest-only. Okay. But it's also to do with how much equity is in the property. So, you can't get interest only for someone who's looking to borrow, say 90 or 95. Sure. But there's a lot more flexibility now.
Okay, yeah. I mean, if that was the case, it'd be essentially the bank's paying your rent as well as your mortgage. Yeah, so no, for sure. Okay. I mean, importing mortgages. So that's obviously if you're with one company and then you're going to move house. I mean, you still have to go through the recalculation process, I guess, and be reassessed. Because I've had mortgages before, and probably my circumstances change. I don't have a set salary, and then if you find out that you can't actually port it. So is it quite common that people do actually, stick with one product and move house, and then able to take that to the next? Or is it kind of a gimmick from big companies that they want to keep hold of your custom, but then they sell you different products? I mean, is that me being sceptical? Is it?
Yes. I mean, we do have clients here and there. I mean, it doesn't happen every day, but now and again, those clients who have tied in for the 5 years, or they are tied to a product. Yeah. And we do all the calculations and make sure it is best to stay with that lender and pour that mortgage onto the new property and take out the additional borrowing with them if needed. Yeah. But it doesn't happen every day, but now and again.
No, that's great. Well, Liam, it's been fantastic. So the little punt out there for the website for the company is
it's kingswaymortgages.co.uk.
.uk, and we can get in contact. Liam's email address, your Liam at
so LMJ, so Lima Mike Juliet at kingswaymortgages.co.uk.
Great. So and I'll have all Liam's details on be on the UK Health Radio website as well. So if you need any questions with finance, or if you're looking to buy, or if it's just any property related financial questions, I'm sure we'll be able to answer those. So thanks for joining me today, Liam. It's been a pleasure, and hopefully speak to you again soon.
Thanks a lot.
Brilliant.
You're listening to The Property Show with Matt Turner of Astute Property Search. If you have any property-related questions that you would like to ask Matt, you can email him at matt, with 2 T's, at astutepropertysearch.co.uk. He'll be delighted to hear from you.
The Marketplace with Matt Turner of Astute Property Search, showcasing different areas of London to live or invest in. So the Marketplace has brought me to Tottenham Court Road today. This is an area normally that people associate with sort of theatre land, right next to Oxford Streets, where all the tourists come and do their shopping and go home with too many bags, I suppose. I'm with Rod Heffernan, who works at Winkworth's. I've known Rod for probably over 12 years now. We used to work in St John's Wood as competitors, I suppose. Smiled on the street and then probably were on the phone trying to steal each other's deals back in the day. But no, Rod's a great guy, and he really puts a bit of fun in property. I deal with him now and from the buying side. How are you, Rod?
I'm very well, thanks. Yeah, good to be here.
Fantastic.
Thank you for inviting me.
That's great. We were just talking off air, and you surprised me. I asked how long you've been working in property and where you started. So do you want to start by
Yeah, started back in Port-de-Banus in Marbella, 1982.
Yeah.
I was at sea for 5 years before that, and the owner of my yacht was building 500 apartments in Port-de-Banus. So he said, "You've had enough of being at sea," and I had enough of being at sea because I'd been going around the islands several times, and after a while, it gets a bit boring, funnily enough.
Yeah.
And I just think 5 years was enough, so I took him
Spain,
up.
yeah, it was on one of the islands. It was
Well, Port-de-Banus is Marbella.
Marbella, yeah, okay.
Marbella, yeah. That's where we were based at the time. So I said, "Yep, I'll have a crack at this. Take it on board." What did I do? He said, "Just go out there and do it." So that's what I did.
Okay, so you just sort of just picked up the reins and on terra firma, so to speak. Yeah.
Yes,
Okay.
yes. We had an office in Port-de-Banus right on the quay. We had an office in Albemarle Street, Mayfair, and our head office was in Whitchurch, Aylesbury, near Aylesbury.
Fantastic.
Yeah.
Okay, no, good. And so your journey's taken you from Spain to London.
That's right.
And
Yeah.
obviously I mentioned we met in St John's Wood at the time.
Yeah.
You must have seen some quite big changes during your time. I mean, anything you can...
Well, just the incredible uplift in prices, and also the interest rates. Between 88 and 95 interest rates were 8%, 9%, 10%, went up to 15% at one stage. In order to get out of the ERM, they were up to 17% for 2 weeks.
There's a lot of panic going on, I guess.
A lot of panic then. But still, the good thing was that the banks were still lending 100% mortgages.
Wow.
And that's what kept the market going, was the bread and butter.
Yeah. That sounds a bit like a credit card these days, isn't it? 100% mortgage at 17%. That's kind of a kneecap
Well, the thing is,
lending.
when you look back then and you're here now, what you can't believe is how low interest rates are.
Yeah.
And you would never have thought that then. You'd have thought 7%, 8%, because the boom in 85, 86, 87 was on the back of 8% interest rates.
Yeah.
Everyone thought that was really cheap, and they were borrowing left, right and centre.
Yeah, no, it's pretty crazy. So the base rate in England at the moment is 0.25%.
It's just unbelievable.
I mean, in many ways, it's an opportunity, I suppose, if you're going to leverage and get into the market. It is a great opportunity, for sure. So tell us a little bit about Tottenham Court Road, where you're working here, the areas that you cover.
Yeah, it's very central. I mean, you couldn't be more central than Tottenham Court Road. Centre Point is an iconic sort of tower, always has been. You've got Crossrail running underneath it, soon to be opened at the end of next year. So from there to Heathrow is something like 24 minutes.
Yeah, I mean, it's already well connected as it is, isn't it? You've got two. It's on the Central Line and the Northern at the moment, right?
That's right. Yeah, I mean, I think the public transport in London is actually very, very good. You've got numerous buses, tubes, and then you'll have Crossrail. And of course, a lot of people enjoy walking everywhere because there's so much to see.
Yeah.
But it's very central. Prices here have done pretty well over the last few years. And of course, you're near to the British Museum and all the theatres and Soho. So if you want a good time out, you couldn't be in a better place.
Yeah, no, sure. I suppose with the that area, that does create a bit of a market for, I suppose, short lets. I suppose you've got a lot of people buying from you. Going with that angle.
There's a lot of short-term lets, Airbnb especially. But one has to be wary that you can do Airbnb in one fine stay in Camden, but in the Borough of Westminster, you're not supposed to do any short-term lets for under 90 days.
Yeah, that's right. It's a £15,000 fine or something.
It's a £20,000 fine.
Okay, yeah.
But obviously people do, and I presume that if the tenants are well behaved, then not much is reported or said.
It's kind of retrospective, I suppose, in many ways. I mean, you're dealing obviously with end users from time to time as well. I mean, it's not really a place I would affiliate with people living full term.
No, it's actually a lot of people do live here full term.
Yeah.
Virtually all the residential above the commercial is residential. I mean, they're all flats.
Yeah.
And we're selling a huge amount, or have been in the past a huge amount, not so much now, to overseas students whose parents are buying them their flats because they're going to UCL, King's, LSE, all these fantastic colleges, and they want them to be within walking distance, and they want them to be safe. So if the block has got concierge, then fantastic. But we've really been able to keep up a reasonable amount of sales simply because of the colleges and the overseas students going there and the parents coming in. And that's both to buy and to rent.
Yeah, I suppose, the shrewd investor, I suppose, he buys a place for his son or daughter, and then, they have quite long holidays, don't they? I suppose that would be an opportunity then to do the short let in between.
Yes, that goes on, and then after the 4 or 5 years when the son or the daughter's qualified, they keep the flat on, and they continue to do short lets, or they may look at longer lets.
Yeah.
But they actually don't sell them. They keep hold of the flats because they realise that being in this part of central London, long term, very good investment.
Yeah, no, for sure. What is the sort of entrance level, say, for, what are they buying, a one-bedroom flat they're looking at? Or?
They'll be looking at one-bedrooms between 750 to $1 million, two-bedrooms between 1.2 to 2, and three-bedrooms from 2 million onwards.
Yeah.
And that will be on the basis that the son and the sister the brother and the sister can share, or you've got two daughters or two sons, and they can always rent out the third room.
Yeah, to a colleague.
That's right.
So, just going back to yourself, you've obviously worked in, I think you said 34
years.
Wow,
yeah.
That's quite an achievement. It's quite a frustrating job, so you've done well to carry on.
Oh yes, I've always enjoyed it. I've always liked getting out and meeting people and having a good old chat. And there's never been any pressure for me, really. Just get out there, have a good time, enjoy yourself, and try and find out what they're looking for.
Yeah, no, for sure. You've worked in quite a few areas of London. What's your, obviously you're here now, but what was your favourite area to work in?
I think round here, I've been here 16 years, I really like it.
Yeah.
Also the enjoyment of having to walk everywhere, because you haven't got cars around here. You've got nowhere to park them. So we walk everywhere, so I can clock up 4 or 5 miles a day, and that keeps me fit and helps me towards my rugby on a Saturday afternoon. So it gets you out and about. I'm a passionate rugby fan and player.
Rod quite often phones me when he's got a good property deal, and we just talk about rugby for 5 minutes. My knowledge is very poor, to be fair, but
getting better.
You're teaching me a little bit. You said about keeping fit. You live in West London,
Brook Green, Hammersmith.
Okay, so you cycle across?
I cycle across Hyde Park every morning.
Okay.
And cycle back every evening, so it's 10 miles a day.
I've got to ask, because I just interviewed a mortgage broker and he cycles in, and I asked him how many times he'd been knocked off his bike. And 4 times for him. Have you been knocked off?
No, in 12 years, never been knocked off.
So you're doing something right, yeah?
I'm going a bit slower than the rest of them.
very, very good. No, so generally, the market in general, it's probably softened, in my view, in the last year or so. Where do you see the market sort of going forward in your experience?
Well, it's going to continue going down a little bit further. There's no question about it. After so many years of going up and up and up through the roof, where people were talking all the time about these prices are unsustainable. It's a natural nature of life that if you're a 100-metre sprinter, you can't continue running 200, 300, 400, 500 metres at the same pace that you run 100.
True, yeah.
So sooner or later, a deep, long correction has got to take place. Now, people can blame it on Brexit and the stamp duty, which has shot up immensely, and that certainly has had a major slowing process. But if you'd have taken away Brexit and the stamp duty, sooner or later it would have had a deep, long correction. And that's what's happening at the moment. So for buyers, it's never been a better time to make offers and to really get in there and see if they can get something much more towards the price that they want to buy it at.
Yeah.
Because sooner or later it will suddenly turn, and then it'll be too late.
Yeah.
Because obviously what goes up must come down, and what is down will eventually go back up.
So kind of the window of opportunity in many ways is kind of right now.
It's now in the next 12 months, in my opinion.
It's a very, very good analogy, considering Usain Bolt's just kind of hung up his boots. You can't carry on.
I didn't realise that. I didn't know that actually. Has he? Oh, right.
It's a pretty good analogy. But
right.
I fully agree with you. Actually, obviously we touched on the interest rates. If you're buying at the moment and you leverage, your ducks in many ways are in a row. What's been the hardest part of your, being an estate agent? It is a challenging job.
I would say that perhaps dealing with unrealistic vendors, where they're living in the past regarding prices, and people must move on. They must switch that switch in their brain and say, well, look, things were like this 3 or 4 years ago and things are like this now, and there's no point in holding on. If some people are forced to, then perhaps it's better to rent or just stay put and weather the storm, so to speak, because it has softened.
Yeah.
But generally speaking, it's trying to get vendors to be realistic. You have to be realistic, and you have to shift with the wind. When everything is rosy and the market is booming, then anybody can sell anything.
Yeah, sure.
You know, and you can pretty well obtain any price to a certain extent. But when things become a lot calmer, then it requires a lot of experience to be able to guide your vendor through these things and say, look, you know, you're just not going to get what you thought. So you've got to give it some serious thinking. You know, and there are a lot of vendors out there now with this serious thinking cap on. Of course, it'll change again when, we don't know. But at the moment, in the next 2 or 3 years, I think you'll find... I don't actually think you'll find really any price increases until after the official Brexit date.
Yeah.
And we need more guidance from the government, strength of character to show us exactly what direction we're going. That'll all help.
To add a bit of confidence to...
yes, it'll add confidence,
to people, going forward. I mean, obviously, you touched on vendors being realistic. You know, people listening now might be thinking that, you know, to sell. You know, when you're visiting a house to take on instructions, what tips do you give people to, you know, help them sell their house?
I just tell them the truth. I say, look, this is where the market is now. It's dropped 15-20% in some cases. If you price it to sell, you'll get people in through the door and you'll get offers. But if you're going to price it like it was 2 or 3 years ago, we will not be able to get anyone through the door. You have to get people through the door to get an offer.
Yeah.
Because if you're not getting any customers, you're not going to get any offers. So you've got to be realistic. And if you're not prepared to be, then my journey here is a waste of time.
Yeah. I suppose that's it, actually, isn't it? There's probably a lot of owners in London who don't need to sell, you know, and they're just thinking we might, kind of thing. So it's more that the motivated seller that's the one that's...
The motivated seller, yeah. The people who want to play around, there's no need to play around. There's no need to think, oh, if I sell it and I get this, then I will take it. You won't get that. Not in this market. You won't get what you were planning on for. So it's better if you just stay put, enjoy yourself, stay happy, and then wait for the market to turn, which it will do at some stage. So, I mean, and there are a lot of people in the West End like that who don't need to sell. They got no mortgages, so there's really no point. Also, lettings, although I'm not an expert in lettings has gone down as much as sales has. Okay. You know, they followed each other, where normally if sales go down, lettings go up, and if lettings are down, sales go up. But this particular time, I think a lot of people were finding it just so expensive to be in the West End that they've been thinking, hold on a minute, I'm not sure about this, and move out a little bit further, you know, and travel in.
No, I often say, you know, my 17 years of experience, which is, I guess, half of what you've had. I always advise people that they've got quite flexible on when they're going to be buying. November, December is quite often the best time. One, because it's dark. People are thinking of Christmas. You know, the psychology is not, you know, not really. People are basically down at that time of the year on year. Whereas April, you know, vendors are more, you know, it's a time to sell your house. I kind of think every month is November at the moment. That's kind of how the market is in many ways.
I would agree with that.
It's quite flat. And,
yes.
No, for sure. So yeah, I was talking to a mortgage broker before. I mean, most of your clients come to you, they're using property professionals?
I mean, I would say as much as 95% of all our clients are cash.
Okay.
The other 5% have their own finance arranged through their own banks who they've got substantial holdings with. But if they want a mortgage broker to be put forward, I always recommend one because, you know, then you're not just dealing with the bank, you're dealing with a range of different levels of what you can buy at. And it's always good to have. They don't have to use him. Yeah, sure. But they can have the knowledge because it's there of what they're offering. Yeah. Yeah. No. Okay. So obviously you're here at the minute. Rob, where any other areas you're thinking of? You thinking of going back to Spain at all, or is that I might. My brother lives in Spain. My family have got a house out there, and I think I will probably go out there and maybe some stage in the future do some real estate out there, possibly, or coach rugby. Or I'm a qualified ref as well. So you know, it just depends really. I mean, everybody out there seems to me to drink an awful lot, where I don't drink at all, but but they all seem to look a hell of a lot younger because of the sun than what they actually are. So it's a nice country, and the weather's very nice. But we'll have to wait and see.
We're here for now. So I mean, just
we're here for now.
Kind of finishing up. What's been the most rewarding part of your job? What would you say?
I would say the happiness of people enjoying the fact that they bought this particular property and they've been really pleased with it. That's always a big thing, And you go out to lunch with them, and they give you a bottle of champagne or something, or they send you 2 tickets for you and your girlfriend to go to the theatre. Yeah, to see a job well done.
Handed over the keys.
Exactly. To see that the stress has gone out of it. It's all done now, and you're feeling a lot better, and so now you're going to move in. So that's always very pleasurable. Very pleasurable.
Fantastic. Well, it's been a pleasure. How can people get in contact with you? What's you want to?
Oh, just ring me at Winkworth West End. You can.
Or your
you can
email addresses, or you can pop that out there.
My email address. But if you Google Winkworth at West End and you see the team, you'll see me there. Rod Heffernan.
Fantastic. You're looking in London, probably many parts of London. Rod's obviously got a great knowledge. He's a real character, and as you can tell, he's got some fantastic experience. So thanks for joining us today, Rod.
Pleasure, not at all.
So thank you again for joining me today on UK Health Radio. Next week we're having a break from London as I'm taking the property show with me to the Pyrenees in the southwest of France. I'll be meeting a local real estate agent to talk you through the buying process and discuss current opportunities, be it a lifestyle purchase or investment in France. So until then, have a great week, dig your French dictionary out, à bientôt.